Many people believe a handful of tech billionaires single-handedly steer the markets with a few social media posts. Others look to Washington, assuming the global economy is orchestrated from within these walls. There is even the assumption that central bankers are the ultimate puppeteers, pulling strings to stabilize or sink the financial world. Actual control of the global economy resides within a single artificial intelligence system operating out of a heavily guarded server farm in Washington state. This is Aladdin. It manages over $21 trillion in assets, a scale so massive it processes a significant percentage of all global financial movement through its central architecture. While a retail trader is limited to staring at a 15-minute price chart, Aladdin maintains a planetary view, ingesting millions of data points across every asset class simultaneously. This informational gap is the primary reason individual investors lose their capital. They are forced to play a game of directional guessing, while the institution uses this planetary data to operate with mathematical certainty. Aladdin, the asset, liability, debt, and derivative investment network, serves as the central nervous system for BlackRock and dozens of other massive financial institutions. Rather than guessing where a price is going, this risk management hive mind runs millions of Monte Carlo simulations per second. It maps out thousands of different future trajectories for the market simultaneously. For example, the system stress tests specific equities, like Apple, against physical world events. It calculates the exact probability of a stock price drop if a hurricane hits a critical manufacturing hub. It also calculates macroeconomic chain reactions. If a European bank fails, Aladdin immediately simulates the specific ripple effects on the price of gold and other commodities. A retail trader has zero chance of competing with $21 trillion of predictive processing power. Because Aladdin's simulations prove the market is a cloud of infinite chaotic variables, trying to predict a single correct path is mathematically futile. Survival in 2026 requires moving past prediction and adopting a system designed to manage the risk of every possible outcome. A new generation of solo quants is now leveling the playing field by building Mini-Aladdins directly on their laptops. The core of this system is an AI risk overlay. This architecture calculates your portfolio's value at risk, or VAR, giving you the same mathematical defensive line used by the giants. You build the foundation by using Python scripts or automation platforms to connect data feeds from Polygon.io directly into OpenAI's API. The first agent node scans global news APIs 24/7, translating macroeconomic headlines into raw data for your risk model. A second agent continuously updates your portfolio's volatility and recalculates your value at risk threshold every single hour. The third agent acts as an automated reflex. The moment your risk threshold is breached, it executes protective put options or hedges your assets into stablecoins. Wall Street thrives when the public remains ignorant of this architecture, as it allows them to continue harvesting capital from those taking on maximum, unhedged risk. These institutional-grade tools are now accessible to anyone. With the blueprint for a Mini-Aladdin available on your laptop, continuing to gamble with your savings is a deliberate and high-stakes choice.